we're starting off week 31 with a look at the CFTC report from Scotiabank. Main drivers was Euro. Towards the beginning of the week on Monday, the EU Recovery Fund got agreed to, and that started a massive inflows into Euro, which was building on the previous weeks as well. The majority of the move was really Euro. We saw a big jump in open interest, and net longs increased to 18 billion. All the other currencies didn't really see a lot of movement. Key driver was really Euro. And interestingly is, when the CFTC data reports that gathered the positions from all the institutions and speculators on the afternoon of the Tuesday, and the news broke out on the Monday, so all the positioning was really fresh. Probably started on the afternoon of the Monday and the Tuesday. Going forward, we expect this to build and create some more upside in Euro as well. Danske Bank tells us that on week 31 we will have a net negative cash flow of 9.7 billion euro, so that's another positive for Euro going to next week. Quick look at the inflation expectations. So we saw a huge surge last week, mainly because of two reasons. One, during the summertime, investors tend to buy TIPS, which is Treasury inflation protected bonds, and that tends to drive up this index. You tend to see that commodity currencies like the Canadian dollar, Australian dollar and New Zealand dollar tend to follow major swings on this chart. So I'm expecting probably a little bit more upside in Canadian dollar, possibly against USD in the next week, as it's been lagging a little bit. This is the real yield chart, and real yield is inverse correlated with gold. So I'm going to flip that chart around, and I'm going to chart this against gold. I'll change the color just to emphasize it. Now, gold's been ramping all week, and inflation real yields has been coming off a little bit, but gold continued going up. Depending on what's going to happen with going to the FOMC meeting and with the yields, there is limited upside for gold going into next week unless real yields take another dive, which at this point is not very logical. So I'm expecting gold to play a little bit at the highs, maybe even drop back towards the 1890 range or 1880 range, just to close that divergence that is created with the real yields over the last couple of days. Going to next week, we have not a very busy calendar. There's one or two events that are really key to us. Starting the week is Monday, and then going into early hours of Wednesday, we have Australian CPI. Now, Australian and New Zealand CPIs gather more attention because they only print them quarterly, where other countries do them monthly. We're expecting a fairly drop, but what will be key will be the annual inflation. That's going to be a key driver for Australian dollar for the rest of the week as well. I'm expecting Australian dollar to keep diving into that event, ideally against Euro, as Euro is quite strong right now. So I'm expecting Monday, Tuesday to find another leg higher, possibly into 1.65 for Euro AUD going into that event. On Wednesday itself, we have FOMC meeting, and FOMC meeting is not expected to produce anything new. However, there has been an interesting development in the TLT. So TLT is the 20 years bonds for the United States. Last Fed meeting, which was I believe the 10th of June, this started bottoming, and it continued to climb and climb and climb. And it's coming into a critical level where it sold off last time. And the reason it's selling off or sold off last time is because 10-year yields just became too cheap. And there tends to be a sort of bottoming for the yields, which also means a top off for the TLT around that event. Now, what I'm expecting is that the FOMC meeting will cause TLTs to drop off, possibly before it. And there's interesting inverse correlation with USD JPY. So if I drop that here for you, and I switch TLT around, you can see major swings on the TLT, and USD JPY was somewhat enhanced. So we're expecting TLT to drop off, which should which should cause USD JPY to move back towards the range. The headwind we will have is euro is quite strong, and that causes USD to stay off it. However, going into the FOMC meeting or past it on the following day, I'm really expecting USD JPY to have bottomed by then for the rest of the week and start finding its way back towards 1617 levels. Further on, we will have German GDP and United States quarterly GDP. These are the prelims, so these won't be the final readings, but these are the advanced readings, which tend to have a stronger effect on the FX market. And my ideal play for that would be Euro USD. For one of the real main reasons is that Euro is doing pretty well right now because of the recovery fund. And even if you have a quick look at the readings, we're expecting a minus 9% decline GDP in Germany, but a minus 35 in the United States. So there's a stark difference between these two countries, and that's also building on last week's PMI readings, where we saw really strong PMIs from Germany. And when you read into the details, it shows you that Germany export demand is picking up, which is really positive. But on the other side, United States, the exports were sort of flatlining. So I'm trying to build on that going to Thursday, expecting Euro USD to find another leg higher. If by then it has not taken out 117, Thursday will be the day. Final piece of data that's important to us is manufacturing from China, the PMIs. Expecting again a good reading, and that should possibly help AUD stabilize, especially against currencies like JPY. So by then I think most of the earnings calendar in the United States will have came through as well. I'm expecting the PMI to cause some sort of stabilization in AUD JPY, maybe even give it a few legs higher. We have Canadian GDP as well, and a couple of other United States data, but at that point not really sure how these gonna affect market. So the key movers will be next week, expecting a bit of a dive on AUD against Euro going into Wednesday. On Wednesday itself, FOMC meeting, expecting USD JPY to jump a little bit, and on Thursday looking to get into Euro USD long again. Thanks very much.